like even if the market is extended and it's just up a lot, we'll probably have to chase it up, you know, and hit it. But we also have had gap fades like quite often over the last, you know, over the last month or so. So when that happens, you know, we could go the other way too. So we're going to have to be able to play it both ways today. There's not an exact plan of attack like we normally would have because of the size of the damn gap, right? And so that's going to make things just a little bit trickier, and we'll have to be mindful of that. So when we think about like our list, right, like you're going to have like a lot of the stocks on your list, they're already gapping up like they're having earnings, right? So we've got like this Twilio and stuff. So we can't chase that off right at the bat at the open. What we'll have to do is wait either for a pullback to the 9 EMA and then a go, or we'll watch that QQQ, that kind of 162 mark, and we'll take this thing out. So in terms of our list, put TQQ on your watch list. You know, this will have enough range because it's the 3X ETF for the NASDAQ. You know, we put TNA on the watch list. You can see on TNA, you got a big level of support over here. And, you know, if we can kind of come out of this trend line over here, we should, right? We should be able to kind of pop loose here. And if not, if the gap just fades and the market fades, you know, we'll have some supports we can kind of short. I got this SCCO on my watch list. I took this from Simon for potential short. This thing got smoked out on Friday. We'll watch this thing for a green to red. So green to red means, right, if it gaps up a little bit and then it starts to roll over, it's good to go. Hey, Tom. Hey, Hunter. What's up? Hey, Mikhail. Mr. Jaworski, hello. So watch this one for a green to red. This OSTK had a monster day on Friday. 50% of the float is shorted. It is having like a little bit of a spike down at the open. I'm watching this one for a red to green. First thing I'll do, don't pull the trigger on something like this right at the open. Watch and see how it acts, right? Does it come back and it starts to hold? So like obviously this thing's gonna be gapping down like almost $2, right? Does it start to build like some type of low? And then we might be able to take this thing for a preemptive lead, take it for the red to green. Usually at the open, what I like is if I have a stock on my list and it opens really weak, I look for a 1-2-3 pattern. A 1-2-3 pattern will pretty much look like a W where it'll spike down and you'll be like, oh shit. And then it pops up and you're like, huh. And then it comes back and either makes a double bottom or a higher low, and then it goes. And it looked literally like a W. We just go 1-2-3, but because it's easier to see. But that's something, that's probably the type of setup I would be looking at for something that's on my list that's also gapping down like that. So just be mindful of that. You know, but this one's got tons of range, and I believe when I look at shortsqueeze.com on Friday, it's like 7 days to cover on this one. So when you think of like short interest and days to cover, 7 days to cover is a lot, like in terms of it would take 7 days of its total volume to cover all the shorts in it. So just something that we'll have to be looking at. I will say the one thing is that, its news was fluffy because this news has been out for a while. So like this news, they announced this like a year ago. So it looks like they just kind of re-announced it maybe to just get out of something. So we'll have to be mindful of that too. Cool. Let's get to the rest of it. Keep a bunch of the tech stocks because the tech market's gapping down or gapping up big. Keep NVIDIA, Netflix, some of the big cap techs. A lot of these things are kind of stretched to the downside. Even Bookface. You may get a pop in these if the market holds. Now, the big caveat of the day is going to be, does the market hold or not? We don't know, right? As traders, like we never know. What we just got to do is really be mindful of our levels, right? Like, this gap up fills Monday's gap, so that's good. Like you've kind of sucked that out. These gaps can be like suction spots. Now we'll just have to see, do we clear or do we fade back? And nobody really knows. The thing that we have to remember is that the trend on the market is overall down, and that's something that we've got to be mindful of. The second part that we've always got to be mindful of is that we have had big gaps in the market and faded off in the last couple months. We've seen that a few times, and actually some of the days where we had big down days, The upside gaps got faded off. So we'll have to watch that. It doesn't necessarily mean, though, that it happens today, right? You get put your hand in the cookie jar too many times and you get, right? You lose your hand. So what we'll have to do is just be real mindful of our levels and kind of play it as we see. Like I told you, statistically, this is my toughest day to trade. It's like 50-50 for me when I'm trading some of these days. So just kind of something to be real mindful of. I have a weird feeling about today. Let's take a look at some of the gappers. And guys, hit me with your tickers. Tell me what you like. Hey, Ernie, how you doing? Fernando, what's up, baby? Mr. Gaylor, welcome to the party. So I know a couple people were asked about this RLSS. Yeah, so this one had a reverse split. It was like 140. Yeah, you could see a little bit of juice on this. Most likely it's kind of fluff. So, you know, you may get a big pop at it at some point today and then it just fades back. These things are all turds, as you can see. Like this thing gets pumped all the time. It went from 2 to 8 and then it's faded back the same damn day. So this is a pump and dump type of stock. You could trade it if you got an ORB or, you know, like a full-blown pattern on it because it doesn't matter that it's a piece of crap. But I'll probably stay away. I'm not into all that funny stuff. Yeah, so JKS is another one. JKS, another one here, right, where you're busting out that trend line. It looks like there's kind of some earnings or something, or some type of news out today. You can already see a nice pre-market trend on this bad boy. I'd keep that on the list too. Hey, Timmy, what's up, baby? Mr. Casino, ¿cómo estás? Yeah, so, you know, I was talking about this with some of my guys. TRY is definitely coiled up. You can see, like, after the wide range, how it's getting tighter and tighter and tighter and tighter. When you get a range compressed like that, you know, it's called, you know, range compression, essentially. That can create explosion. So this does look explosive. It's on my personal ban list for now. I'm like 0 for 5 on this on my last like 5 tries. Anybody ever have just like a stock that they just don't get along with? This is mine. And the reason is that even though it does decent amount of volume, the spread on it gets me sometimes. Like, you know, I've had this thing where it's like, you know, the spread on it can be like $1 or $2. And, you know, even if you go small and say you roll like 200 shares, you know, it drops a couple bucks and then you guys sell it on the bid. So you lose a couple more bucks. Before you know it, it's like you just lost $1,000 and the thing barely moved, you know. So you got to, when you trade this, you got to trade it small and really let this thing kind of develop and do what it's got to do. But I will say that the chart is hot. So you definitely probably should keep an eye on it. As long as it's not on your personal ban list, you're good to go. Raiden. Oh, good. Yes, I'll see a lot of you guys in boot camp class starting tomorrow, so that'll be good. You know, Shop, a couple people have asked about Shop. This one's kind of in the mid-range on it, so Shop obeys no laws. You can see like it kind of just it's just in a range. It knifes through its moving averages and stuff too. So because it's not in a trend, it'll act like they're not even there. So you can kind of just play the range and get this thing back to, you know, it might kind of creep its way back to 150. Hey Kevin, what's up, baby? Yeah, this GWPH is a turd. I'll tell you why. Not because it's a little legitimate turd. The volume's just sucking on it lately. That makes it really tough to trade. You know, like when you get 100,000 shares in volume, that's 10,000 shares an hour. You know, like where do you have to go at that point? Yeah, you can add PLT to the list too. So guys, this is actually, this one, this is probably one of the only handful of gappers that were out there today. It looks like earnings season's been busted over. So you should be good to go. Yeah, you're kind of breaking down over here. So I like this one. I think you got just enough action on this one. The key on this one's going to be like, is the volume there? Yeah, I think this is actually looking like a bear flag too. I would lean more short on this one. I agree. Good, 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 good. Yeah, you know what? We had actually a pretty fun week in the chat room last week. For a short week, I think we did ALK. Look, this Billy is just stuck in this range till it like breaks this range and actually holds there. It's really tough, right? It's really tough. So that's just something, you know, you've got to kind of just really get in your head sometimes with these things. Is like, it looks so hot, but then when you think about it, right, it's just stuck in that range. And until that range clears, it just is a tease. Like, you get all excited about it. You're like, yes, right? And then next thing you know, it's not yes. Yeah, I've had this thing. It's happened to me a couple times on this thing, you know, but I'd keep an eye on this. It popped hard on its earnings the other day. So, like, I'm leaning towards at some point it does break out, but it is kind of worrisome that it hasn't broken out ever, right? So I just kind of keep an eye. Like, I think it's worthy of putting on your list, but I wouldn't take too much mental capital on it till like the range like breaks and holds, and then, you know, let it do what it's got to do for your own mental health. Coo 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 coo. Dun 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 dun. Ch ch ch. Let's see. Read. Good, good, good. Let's see. Bum, 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 bum. Yeah, you can probably put this HMI. This stock's never been a good trader. Like, I mean, in general, its range sucks. So, you know, you'll have to just be... That's why I saw this pre-market too, and it is like at a breakout spot. So very well could go. You know, the caveat on this one is just going to be that it never really trades that well in general, but, you know, it did beat EPS, and it is an IPO stock, so like in general, like it should be able to move. I'd add this INVA to the list too. Mr. Feidelberg brought this up to me in morning class. This one's got pretty good range on it too. I'd keep this on your watch list. What's up, Taylor? How you doing? Good. All right, so plan for today, right? We have our levels. There's two options. If the market fades off, we'll look at the 9 EMA as support on our plays to see if we can bounce it, right? How does it hold at the 9 EMA? If we pull back and fade the gap. If we don't fade the gap and we stay near highs, we'll need to take out the 162 to go just full-blown, okay, this is a market short squeeze, and we're adding longs. In bull markets, you don't have to ever really look at the market. Everything is just a buy, and you just kind of grip it and rip it, and that's just how it goes. In bear market type trading, when the market is under all its moving averages, you've got to pay attention to the actual market, unfortunately, because, well, the market dictates what 95% of the stocks are going to do. And so that's where you're just going to have a small caveat in how you trade. So that'll be just something we kind of keep an eye on. Yes, natural gas, and I was going to talk about this. This will be a focus of ours today. You know, natural gas looked like it was going to break out. It finally got just smoked out. It's down like 8% today. It's finally probably getting liquidated off. Obviously, it got a huge pump, and you're starting to see like some movement on this. So you'll see some action on this. You have to be careful with natural gas because it does like move like, it can move really wild. You know, I had a student of mine, I'm not going to name any names, but you know, like, I mean, I had a student of mine get smoked out like, you know, a couple G's trading really small on this thing, like, you know, adding this thing up here, and then it just dropped like $10, you know, in one candle, right? And so then what do you do like when you get something like that? So you got to be real careful like when you're going into this. When we trade natural gas, like trade really small. Like if you're normally going to trade like 200 shares, trade like 50 shares or something like that, or something like this. You know, it's easy to just get like a big loss under the belt and it ruins your week, especially on a Monday. You don't want to do that. All right? So guys, watch the markets today. You know, really, when the market's like this, you can trade pretty much any stock. They're all going to move together. So just add the most volatile names, and you should be good to go. Looks like earnings season's over, so we're not going to have that many good gappers for a little bit. That's the nature of the game. What can you do? What can you do with the Klondike bar? All right, let's go do what we got to do, folks.